Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our Stock Monday buys here on the 25th of January 2020. It is our last and final week here, and what we're going to go ahead and do is go over stock futures going into Monday. Also, we're going to go ahead and cover an article that I saw floated around earlier today as far as investments from foreign companies moving out of the United States and over into China. Also, we're going to go ahead and take a look at the M1 Finance performance of the overall performance, then take a look at the 1 week performance, what stocks were up, what stocks were down, go ahead and cover some of the activity over the past few weeks. Then we are planning on selling, I believe, 3 companies out of our portfolio, 2 or 3 companies, and we're going to go ahead and take the funds that we have available now and some of the new funds, and we're going to go ahead and purchase 2 companies with those funds. We already have them. I'm going to go ahead and showcase why I'm purchasing these 2 companies and kind of going over the selling process of the others. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, helps out the channel, helps others see this video, and others that use M1 Finance. Okay, so let's go ahead and get into the video. So currently going into Monday, stock futures are looking positive. So on open, we may see the market potentially be green, depending on what sort of news is out there. That can change either or way throughout the day. So could be a pretty good day on Monday. Now this article here, I've seen this shared over on Facebook, and as I came here to the after hours here, I also saw the article here. So this had a really interesting thing I was reading about earlier, where it kind of goes into here the direct investments from the US foreign companies have plummeted by nearly 50% here in 2020, whereas over in China their direct investments grew by 4% to 163 billion in 2020. So this was the first year in history that foreign direct investments in China overtook that of the US. So that's a pretty big move. I know a lot of investors were kind of talking about this and discussing, how do they feel about investing in foreign companies such as China, where we've seen what has happened with Alibaba, where the president or the CEO had been missing for a few weeks. He tried to talk his mind, and the government there wasn't very responsive with that. So other companies such as Luck Coffee, I think it was like Lucky Coffee, they fluffed their numbers, so more money is flooding over there. But how accountable are these companies overseas and in China, and how fast is it for the government to control and deteriorate companies that have spent so much time building up? So that's just my thoughts on it. I don't believe I have too many, or if anything, that is specifically from China. Like I don't invest in Neo, I don't invest in Baba, I don't invest in any of those other companies that are over there. I focus generally on the US companies. So let me know down in the comment section below, what are your thoughts on investing overseas? Do you invest in anything over in China? Now let's go ahead and jump over into the M1 Finance platform and take a look at the overall performance. So overall, we're up pretty nicely, about really close to about $5,000 of gains and nearly $2,000 of earned dividends. So that's very nice here within the portfolio. Now our best winners, let's go ahead and take a look at our 3 best winners and our 3 worst losers. So Apple, number 1 right now, followed by Eaton Vance and Lowe's. Then at the very bottom, our worst performers are Simon Property Group, down nearly 47%, Waco Group down nearly 26%, and Altria down 18.27%. So pretty hard hit down on the other spectrum there. Now as far as our overall performance, our 1 week we're up 0.57, so we're very close to the Dow Jones, but every other index such as the S&P, the Nasdaq, and the Russell 2000 beat out the portfolio. And here we can see that our 1 week performance was mainly carried by Apple and Tanger Factory Outlet. So there was a very little smidge of green here, and that was Apple and Tanger Factory Outlet kind of helping push this portfolio into the green. And then our worst performance, you can see that there's quite a few companies down here in the red, with our worst performers being ABM Industries, Waco Group. So this one's already in the red by quite a bit, and here it is going down 3.63% in a single week. JP Morgan, it's a pretty good high flyer at the moment, so that one's not, I'm not beating that one up anymore, but I would like to see Waco have some sort of recovery in the future. And that is our 1 week. Now, as far as activity goes, we've had a lot of activity since we've actually kind of covered this portfolio. I'll fund my portfolio on Fidelity and my wife's portfolio on M1 Finance, but we'll kind of see how this plays out. I like the platform. I think it's fun and interesting, so maybe I'll leave my wife's portfolio here on M1 Finance, and then I'll just kind of consolidate everything else over on Fidelity. So I'm still deciding there. But as of early or late December, we had a ton of dividends just get paid anywhere here in January, which I don't think we've covered in any of our last videos. So we've had a ton of dividends from WP Carey, Cisco, SPG, and Altria there, nearly $15 there from Altria alone. And then we've made 2 deposits so far here in 2021 of $120. So we haven't actually invested anything. So we have $330.64 sitting in cash. So what are we going to do as far as our stock buys? So this is where I wanted to go ahead and cover a few of the companies that I'm actually planning on selling out of my portfolio 100%. Now LVS, I'm pretty sure that one has been sold out all the way, but as I click into here, this is showing that my current value is 000, but when I go into my holdings and I look at my cost basis, it actually shows here that Las Vegas Sands has 9 cents invested in it. And here this is showing that I have a cost basis of $25.06.20, and I do see that right here that when I added up all my numbers and I was supposed to be sold out of LVS, I should be at $25,006.11. So that is actually being some sort of value there. This is going towards the cost basis. So I'm actually going to be going ahead and doing another sell of this one and then completely removing it out of my portfolio after it's been sold out again. But we're going to go ahead and discuss why I'm selling out of these companies. So let's go ahead and take a look at revenue, net income, and free cash flow. And let's just look at the last 3 years for the companies that I am planning on selling out of, which is Las Vegas Sands, Community Trust Bank Corp, Lancaster Colony Corp. I'm not going to be selling out of McDonald's at the moment. I'm going to go ahead and keep that one. You know what? I'll go ahead and keep that one up there. I was looking at McDonald's as well as far as a sell, but I'm not actually planning on selling McDonald's at this time. So starting with Las Vegas Sands, we can see that over the past 3 years, this company, let's go ahead and put percentages in here. You can look at the numbers, but percentages just show you how much they've actually lost. So we can look at their net income for Las Vegas Sands, and they're down $757 million and $1.61 billion in free cash flow, and their revenue is just decreasing. And it started here back when this whole illness came out, but we're not sure how long it'll actually take for whatever takes place here in the future to recover. And this price for this company has been going down. It's not here in the short term. Going into 2020, I potentially saw some recovery with this company, but with the whole situation with what's going on, I'm not seeing anything in the future that could potentially have this company recover. Here we have earnings per share dropping from about midpoint. Let's go back to the 3 years here, but as of prior to 2019, their earnings per share just has been dropping. I saw some potential recovery here in midpoint 2019. That's when I started buying into Las Vegas Sands, thinking, hey, their earnings is moving up. This could be a good recovery play, but going and having experienced 2020, I can see now that it's not going to work out currently for Las Vegas Sands. So maybe in the future, I will buy into them once again. But at this time, I am completely sold out of them outside of 9 cents. And I don't know if this will go through as far as, selling out of it. But I'm going to go ahead and go into here and click sell, and just go ahead and have $15 of sell and confirm that. I'm going to remove this out of my holding, but if I don't do it this way, if I go in here and edit them and remove them, it's going to auto rebalance my portfolio and use my cash balance to automatically buy into my total portfolio, which I don't want to do. Now, the next company I'm planning on selling out of is Community Trust Bancorp. Now, this one isn't in a bad position here. We can see here that its price has been climbing higher. This company is positive at the moment. So if I go over here to my total portfolio and I look at Community Trust Bancorp, it is up by 24.7%. So I have made some sort of a return on it, but what I'm taking a look at here is, let's go ahead and remove the price at the moment and their earnings. There we go. We'll just look at it. Let's go down here and change this to percentages. Now, there's nothing really wrong with this company, but I want to go ahead and focus on companies that, this is a small regional bank, unlike a JP Morgan or Wells Fargo or a Citibank. This is more regional. So Community Trust Bancorp, I want to try and focus on larger companies that are easier to find information and data on. As far as tracking its free cash flow, revenue, and net income, it was looking really positive. There's nothing against the company. It does have growth and it's moving in the correct direction, but it makes up just a small percentage of my total portfolio, and it makes sense here in the short term just to sell out of it and just be out of it and focus on some of my better positions. So here I only have nearly $100 in here, but it's just that position. I think my money could be better used elsewhere in order to consolidate. So here I have $95 here of value in this one, so I'm going to go ahead and just put in $125. That way tomorrow, regardless if the market pops up and it's now worth $110, I put in a sell of $125, so it'll all be sold out of. So that was our next company, and there's nothing against that company. It's just that I don't want to be a part of it at this time. Now, the next company we're taking a look at is Lancaster Colony. Now, here again, I only have $197.28 invested in this one. So again, it's not a large position, but again, I want to focus on focusing on bigger positions in here. I was looking at the graph as far as where has this company gone in the past 3 years. And here we can see in the purple, their revenue has been growing, but here going into 2020, so here is when I kind of look at it. Prior to that, when I had bought into this company back in 2019, it had potential growth to the upside, and it is currently positive. Here we can see it's up by 18.37. So what I'm going to do is take the funds from this company that's up 18%. I can see here that in 2020 it is going through a rough patch. I'm not sure when it will recover, but I want to go ahead and cut the win ahead of time, where their financials may not be affecting their price at the moment, but in the future, if this company continues to have their earnings, here's their earnings down here, 1.87% from just 3 years ago. Here, if we take a look at it, their earnings are just dropping. When will the price, here if we just go ahead and bring the price in here as well, their price has been climbing, but their financials have been dipping. So I want to go ahead and just take this time to sell out of this position while I'm in the green and take that cash and put it into something that's better, better investment. Now, I was looking at Kimberly-Clark, not Kimberly-Clark, I'm going to talk about that one as well, but Kellogg's here. I'm going to go ahead and take a look at Kellogg's. Let's go ahead and remove free cash flow for the time being. Actually, I'm going to go ahead and remove the price. And what is going on here? Let's see here. Revenue up 4%. Yeah, free cash flow. Free cash flow is not going to make a big difference here. So we'll go ahead and discuss Kellogg's here. Now, Kellogg's has had a bit of a pullback. So this is showing that it's up 8.27. But in reality, it is down market gain wise by $1.62. And I had thought about buying into this one, averaging down on Kellogg's. But when I took a look at their financials, Kellogg's here over the past 3 years, let's take a look at this company and see where it's going. So if we take a look here at the price, its price has gone absolutely nowhere. Over the past 3 years, it's down 13.37%. If we take a look at their revenue in the orange, their revenue is staying 1% on average, 1.3% on average per year. That's not a lot of revenue, but maybe their net income could make up for it. But when we take a look at their net income and their earnings per share, both of those numbers are trailing down 16.22%. Yes, they've showed some recovery here going into 2020, with the whole illness and the pandemic that's been going on. This company is looking like its earnings is slowly recovering, but I'm not going to be selling out of it. Oh, I didn't put in my sell for Lancaster. So let's go back to Lancaster. Let's go ahead and buy sell and go ahead and hit sell. We're going to go ahead and put 225 to sell out of that one and confirm that. Okay, so I'm selling out of 3 companies at the moment. I'm selling out of Las Vegas Sands, once again, Community Trust Bancorp, Lancaster Colony. I am not selling out of Kellogg's at this time, but I don't feel that buying into it at this time is the best option. I think I would like to see how it plays out here and if there is a better opportunity for a better price. Right here in the short term, it's falling and it could potentially have a better buy versus elsewhere. So here, if I look at their price and dividend yield, let's go ahead and just look at price and dividend yield. Their dividend yield is nice at a 3.91, but if their price continues to fall, right now there's really no stopping it. Had a dip, and there's no double bottom here. It's dipped even further than in the past. It could fall down into the low 50s, giving it a over 4% starting yield. So maybe at that time, I will be buying Kellogg's. It's not that their earnings is terrible. They've had some recovery here in 2020 as far as their net income and earnings per share. Their revenue has essentially been flat, but it's one of those companies that you sell the cereal and stuff. Okay, so moving on from there, we're not selling Kellogg's, but what I am planning on buying today is more Kimberly-Clark. So here we have a yield of 3.24, which doesn't put it at the highest it's been in the past year, but it does offer us a really good starting yield of 3.24 with a stock price of 132. Now, when I took a look at this one, where have they been over the past 3 years? Taking a look at their revenue, their net income, free cash flow. Let's go ahead and bring in their earnings per share and take a look at them percentage-wise over the past 3 years or even 5 years here. Now, revenue has been essentially flat, but while their revenue has been flat, they've continued to grow their net income by 116%. They've also increased their earnings per share by 130%, and their free cash flow remains positive at 36%. So just focusing on their net income and free cash flow, here 2019, they had a bit of a, they dipped, but they hit a bottom. Then they took 2019 and they rocketed up. They took 2020 and they rocketed up. Here in the short term, they had missed their past earnings, which could play a factor in why their price had came down. But I think it just offers such a good opportunity at this moment when I do look at their price, yield, and in the short term here. So they still have really strong financials, and they have dipped over their past earnings, but it's staying flat right here. We have earnings coming up here on Monday. As you're watching this video, I believe Kimberly-Clark is either going to be reporting earnings here in the morning or in the afternoon, and this is a really good opportunity for myself to buy this. It may go down even further, but I think Kimberly-Clark here in the short term or in the long term, it has shown that it has strong financials to back it up and that it will continue to grow in the future and causing that price to kind of bounce back for them. Let's go ahead and talk McDonald's really quick. Here in the short term, I was looking at it, why I was kind of indecisive if I want to sell out of this company. Now, when I take a look at McDonald's and I look at their past 3 years of this company, we can see here that their revenue in the purple is down 14.58. Their net income is down 7.98 over the past three years. Yep. They do have growing free cash flow, but again, free cash flow is not going to really, play a big factor in your business. And their earnings per share has also been dropping here into 2020 here. 2020 it had a peak, and then McDonald's has been dropping since then. So, you would figure with the current situation, fast food may make a little bit more sense. Maybe, I don't know. I don't go to McDonald's or any of these other companies, but it has been decreasing. It looks like it may have bottomed out here in the past quarter, but I'm not sure how it'll do over the past 5 years. So you can see revenue down nearly 25%. Net income is essentially, kind of flat, and earnings per share has been steadily growing. They've had a really big run up here in 2019, and they're kind of normalized, I guess I would say, here in 2020. So we'll just have to see how this one plays out. That's why I'm not selling it. And the other company that I am planning on buying today is WP Carey. So I don't have a whole lot of capital in Kimberly-Clark. I have 574, and at WP Carey I have 652. So I'm going to go ahead and take the funds from the estimated sales along with the new capital, and I'm going to be buying these two companies because Kimberly-Clark, it is up nearly 30%, but at this time I feel that price at 130 is a really good opportunity. And WP Carey, it's only up, this is showing 34.62, but I don't believe that's the actual number for it. So anyways, jumping back, revenue up 22.76, earnings per share up 14.86, net income 132.5. The other number here I want to look at was funds from operation. Over the past 5 years, their funds from operation is just right here. It's in the green, so it's up 80.66%. So this one actually isn't the best opportunity. It's not at the best price, but where I was kind of looking at it at, it's not the best, it's not at the worst. So I want to go ahead and buy more of this company. It does offer a 6.2% yield. There have been times when this company has offered nearly a 9% starting yield, but it is really up only, let's see here, let's go ahead and take a look at, I also considered buying Essex Property Trust, but I'm going to go ahead and just focus on these two companies. And then as I add more capital into the portfolio, I'll go ahead and add more. So here WP Carey only has about $600 and it's worth $652. So really I've only earned about $58 from this one. So even though it's up 9.92%, it's had nearly 20 years of dividend growth. I think here in 2021 will make its 20th increase for its dividend. And I believe I just want to have this a larger position in the portfolio while it's only up 9.92%. So let's go ahead and buy these companies here. So I'm going to go ahead and go into WP Carey, and I have roughly $700 available for orders. So here I'm going to go ahead and put in $350 for WP Carey and buy that. And then in the other one here, I'm going to go back to Kimberly-Clark here, and I'm going to go ahead and do a buy, and I'm going to go ahead and put in the remaining. This is showing that I have roughly $345. I don't think it lets me go over when it comes to, yeah, it doesn't let me go over my cash. So I can't go here and like punch in $400. It has to be only what's available for my orders. So tomorrow I may have more capital in the portfolio left over, but we'll go ahead and confirm that buy there as well. Okay, so that is going to be wrapping up this video as far as our stock buys. So we are selling out of 3 companies. We're selling the remainder of LVS, CTBI, Lancaster, and then we're moving those funds along with our current funds over to WP Carey and Kimberly-Clark. I think that they will both be really good opportunities. So Kimberly-Clark is definitely a really good opportunity at this time, even though it's positive. And WP Carey, again, I just want more of those shares at this time while it's not too positive. So that is going to be it for this video. Let me know down in the comment section below, what are you planning on buying this week? Have you recently purchased anything? And that is going to be it. Again, if you are brand new to my channel, have not yet subscribed, go down below. We cover the stock market, dividends, real estate. Yeah, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time release a brand new video. And of course, give this video a thumbs up, make it blue. I really appreciate it, and I will see you guys in the next video. Bye bye.